We are living in a topsy-turvy world. There is no explanation for why we see certain moves in the markets other than complete manipulation. The financial system has become so fragile that a powerful but temporary shock can easily collapse it. That's what we're dealing with today. There is no immediate resolution to a crisis that is underlying the current day-to-day events we see now. If people can't pay their bills, the lenders will fail. If the lenders fail, the Fed will print money out of thin air and buy their rotten assets. You came here for the truth, so let me unveil that for you. Today I have a very big video. I've got everything from the markets. We're going to look at the economy. I'm going to talk about the banks, the financial sector. We're going to look at everything you need to know right now, so stick with me. I want to begin with the markets themselves. The markets went up by 1,600 points in the Dow Jones, S&P up 175. This has looked really good right now. And why? Because, quote, a glimmer of hope. Not anything to do with the economic impact of what we've seen, nothing to do with the collapse and the problems of the derivatives that are already starting to happen. None of that matters. Look at the VIX moving down to 45. Don't worry, the Fed has your back. I wanted to compare 1929 Dow to what we see today, and the pattern is of course similar, but this is to be taken with a grain of salt as always. I'm just showing you the fact that in that instance, there was a resurgence afterwards, and in fact, there were a few of those. Some would call this a dead cat bounce. In this case here, from the top to the bottom, the Dow dropped by 89%. That is quite significant. Of course, different situation, and every single cycle ends with something different, but usually we lead up into that point with a lot of excess, and that's no different despite what some individuals will tell you. There's a lot of excess out there. Now today we are seeing the bubble that might be popped. It was only down 30 or so percent depending on which index you're looking at. That really is not enough to call it that. It's more of a correction as far as I'm concerned because we went up so high. Regardless, when I look at this here, it just shows you to remind you that in the previous instances, whether you're looking at 1929, maybe it's 2008, there usually is, after this waterfall or falling off of a cliff, there usually is that resurgence. So we'll see what happens this time around. Janet Yellen and I are like two peas in a pod. I've got some information for you today. Check this out. I wanted to begin with this one first. Janet Yellen says the second quarter GDP could decline by 30% and unemployment is already at 12 to 13%. Now, whenever I see this here, there's two types of data that we get. One is complete propaganda and the other is complete propaganda. Well, the way it works is that they're going to put out these forecasts in order to suggest to those who run the show at the time that they need to go full force. They want to get the public to have the acceptance for whatever program they're about to put in. Yes, you're screwed in the future, but let us do this now because it's going to make everything a-okay. That's what happened during the financial crisis. My goodness, the people who were responsible for the collapse, the biggest thing since 1929, they were the ones that the government got the advice from to then supposedly rebuild or recalibrate the financial system. I mean, it is just, it's too good to be true. But right here, Janet Yellen and I, we come to terms on certain things sometimes, and it's like music to my ears. Yellen expressed some doubt as to whether the U.S. recovery will signal a quick recovery shaped like a V. This is what I've talked about so many times before. When the markets are expected to return in this manner, when the economy is expected to return in this manner, it just doesn't sit well with me. I've talked about that so many times before, and now Janet Yellen suggesting it could be the same situation. Now, she did say, if you remember, and I know know you do. Most of you that have been on the channel for a while, I know you're looking into this stuff. Janet Yellen said, number one, before she was the chair, she said, I would love to see negative interest rates if that was needed. That's one thing. And then when she was the chair, she wanted to bring easy money policies further and further, all the way to what we see right now. This is all things that she's talked about. And the reason I mention that is I'll show you in the next article. And then after this, she went on and said, we will not see a crisis in our lifetimes. And now completely doing a 180. It's funny, but that's just the way it is. Again, Janet Yellen and I seeing eye to eye. We are peas in a pod. It's just wonderful. Although the banking and financial sector entered the economic crisis in generally good shape, enormous debt loads were an existing vulnerability. Wait a second. Debt loads? Why would a corporation become heavily indebted? Well, check this out. But non-financial corporations entered this crisis with enormous debt loads, and that is a vulnerability. They had borrowed excessively. That might have something to do with easy money policies from the Federal Reserve. Much of that borrowing, Yellen said, was not spent on productive purposes like investments or expanding payroll, but rather used for stock buybacks and to pay dividends to shareholders. Of course, low interest rates made it easier for companies to borrow. We knew that. We've talked about that here. The mainstream won't talk about it, and even the alternative news doesn't even bother focusing on it anymore, but I will on this channel, that's for sure, despite the fact that the viewership keeps declining. The problem is that it creates risks to the economy, and I'm afraid that we'll see it in spades in the coming months because it may trigger a wave of corporate defaults. Even where a company avoids default, highly indebted firms usually cut back on a lot of investment and hiring, and that will make the recovery more difficult. Thank you, Janet Yellen, for taking the words out of my mouth. If you want to know what I think, I completely agree with what she's saying here. It's just funny coming out of Janet Yellen's mouth. These are some quotes from Jamie Dimon out of JP Morgan. We don't know exactly what the future will hold, but at a minimum, we assume that it will include a bad recession combined with some kind of financial stress similar to the global financial crisis of 2008. Our bank cannot be immune to the effects of this kind of stress. Now, this is coming from a high-level individual, and obviously, he's going to be taking part in whatever rebuilding that they're going to do at the end of all of this. I just wanted to stress the fact that they're already calling for this. Bad recession and failures and stress on the banking system, even though you asked them, let's say 2 months ago, they were fully capitalized, they were fantastic, everything is doing fine, we are just loving every minute of it, and unfortunately that will be tested right now. Mortgage bailout. There is going to be complete chaos, says industry CEO. I wanted to do an entire video about this. It was so good, but I just have to squeeze it in here at this time. Maybe I'll do another video about it. But essentially, all borrowers with government-backed mortgages may be allowed to delay at least 90 days of monthly payments and possibly up to a year's worth. Servicers are granting the payment deferrals to borrowers with no questions asked, but the servicers still have to pay mortgage bond holders. It's frankly frustrating and ridiculous that we do not have a solution in place. There is going to be complete chaos. I want you to think of this for a second here, where you have a very simple plan that's in place. You've got the individual who basically can choose not to pay their mortgage. That mortgage here is held with the bank, and the bank, or the lending institution, whatever that is, they've got a set of books, and if they don't look too good, are they going to be getting a bailout? Is the Federal Reserve going to step in and essentially buy up that mortgage, or somehow be funneling money to that bank so that they can assist with that mortgage and make sure that if the payments aren't coming in from the individual, that somehow things keep moving? Well, this is a huge problem, because last time, 2008, this was all subprime. Don't worry, this is not a problem with prime mortgages, it's all subprime, and we saw what happened with that. Well, now this could start at a much bigger level level and in a very short period of time. So instead of it being, let's say, over a 2-year period, imagine it happening over a 2-month period. It would be, as they say here, complete chaos. This crisis is not an excuse. Real estate CEO says those who can should pay their rent. This should not be used as a reason for everybody to stop paying rent. It's a whole ecosystem. The people that can pay need to pay. Some people have lost their jobs, and it's our obligation to work with them. As I said just a minute ago, there's going to be some serious problems happening because individuals are just going to take advantage of it, and why not? If they're allowed to, it's going to put so much pressure on these lending institutions. Why not just delay it a few months if you're able to? Why not delay it a year if you're able to? It seems like the individuals don't even have to claim that they're dealing with hardship in order to delay it. So why not rather have it in my bank than in your pocket? This could be a very serious problem, and we'll know what's going to happen in the coming weeks. The Federal Reserve has done it again. I'm not even sure how many more of these different programs they're setting up. It's ridiculous now. I'm actually losing interest in trying to remember all of them. Here's another one. Federal Reserve will establish a facility to facilitate the lending to small businesses via the Small Business Administration's Paycheck Program, the PPP, by providing term financing backed by the PPP loans. I did a video, I think it was yesterday, that was talking about who really stands to gain from this whole bailout system. This one here specifically, a very small percentage of my subscribers actually watched it, but regardless, in there I talked about this. I think it's important to understand it to see who's actually the winner. If you watch that video, you know what I'm talking about. I wanted to spend a minute to talk about corporate debt. This article here, written by Real Investment Advice, was actually from last year, and they made some points that I thought were interesting. The explosion of corporate debt in recent years will become problematic during the next bear market. As the deterioration in asset prices increases, many companies will be unable to refinance their debt, or worse, forced to liquidate. With the current debt to GDP ratio at historic highs, it is unlikely this will end mildly, and you could see what's going on in this chart. It is excessive non-financial corporate debt to GDP ratio. It just gets worse and worse over time. As they point out at the bottom here, something that I covered as well, Dallas Fed President Robert Kaplan himself warned about how bad this is, particularly, as always, with those BBB bonds. And we've seen the fallen angels, if you watch that video I did talking about that and how serious of an issue this can become, and technically already has. Companies are going to become vastly more conservative on the use of their cash. Given that source of market liquidity is now gone, talking about stock buybacks, the market will have a much tougher time maintaining current levels, much less going higher, as noted by the Financial Times. We still believe it is too early to call the bottom. From a positioning perspective, we still believe there hasn't been a full capitulation. The fiscal bill passed by the US government also allows individuals to withdraw up to $100K from their 401k without penalty. We believe this could result in over $50 billion of further outflows from the retail community, as well. Over 50 companies in the S&P 500 have already suspended their share repurchase programs, which accounted for over 25% of buybacks in 2019. The slowdown in buybacks could result in $300 billion of lost inflows in the next 2 quarters. That's HSBC, and I do believe people should be paying attention to that right there. Stock buybacks are huge, and if we don't understand where the money is going to and from, we're just sitting ducks. Waning demand announced buybacks have fallen in recent months, going from a record high. Of course, it is still a lot, but we've come down significantly from the peak. And here's something I think everybody should know. S&P 500 buyback versus S&P 500 total return indices. Does it surprise you that the companies who are doing the buybacks are outperforming the others? But of course, when reality sets in, it doesn't look so good. That's all for this video. If you found it informative, hit that thumbs up button. You just gotta click one button to support this channel. I appreciate that very much. My friends, if you want to check me out on Instagram and Twitter and basically any other platform out there, all you gotta do is search for The Money GPS. You will find me. See you there. Many ignore the opportunity to learn to sell online over the last few years, and now we are seeing how much of an uptake this particular issue that we're dealing with right now has been with e-commerce. I have a free e-course for my subscribers to teach you about selling online, the AmazonGPS.com. Books. Do you remember those? Yes, the ancient relics. Well, I've got 2 of them that will break down everything you need to know. Check them out at the link in the description if you want the audiobook, themoneygps.com. I get comments every single day telling me I never provide the solution. Well, of course, these people haven't made it to the end of my video, but for those who are still here, I have a playlist. It's called How To and Solutions. So many different videos in here. Check it out. I'll see you there.